Hello everyone, Rahul Shah here, trying to make investing accessible and profitable for the average investor. Now, if you've been watching the markets, you know Suzlon Energy has been on a real tear, especially over the last few years. If I'm not mistaken, the stock has been a huge 25 bagger over the last 5 years and at least a 10 bagger over the last 3 years. Now, if you were one of those brave souls who invested in Suzlon a few years back when things weren't looking so bright, a massive congratulations to you. You, my friends, are what I like to call bold surfers. And that brings us to the core of today's discussion, the two main types of investors. On one side, we have the bold surfers. Now, these are the risk takers. They are aiming for those multi-bagger returns, stocks that can grow many times their original value. They focus on future trends, on what's coming next, and how they can profit from it. They are looking for the big wave to ride. Then on the other side, we have the cautious swimmers. Their main goal is safety. They prioritize protecting their money above all else. They are focused on guarding against an uncertain future, making sure they don't get caught in any strong currents or rough waters. Now, let me give you an example to really show the difference. Imagine investing in a stock like Eternal Limited, the parent company of Zomato. Back in December 22, Eternal's stock price had fallen quite a bit to around 50 rupees a share. To be honest, Eternal had a tough past. It was losing money, its value was shrinking, and investors were losing faith. A cautious swimmer would have looked at this and said, "No way, there's no safety here, no protection." They would have completely avoided it. But a bold surfer, he would have looked past the bad history. He would have seen the future potential of online food delivery. He would have invested based on what the company could become, not just what it was. And guess what? That stock is up almost 5 times since then. Pretty amazing, right? It really proved the bold surfer was right on that one. Now let's look at another example. Consider Engineers India Limited. Around the same time, December 22, this stock was trading at rupees 80 per share. Now, a bold surfer might have actually said no to this one. Why? Well, it's an older company, a government-owned business, and its past growth wasn't super exciting. It did not have that future trend appeal. But a cautious swimmer, he would have loved Engineers India Limited. He would have seen its long history, its steady profits, and its very strong financial position. Most importantly, it was selling at a good price compared to its past value. In other words, the valuation was attractive. This meant it had good safety, good downside protection, which the cautious swimmer truly values. And you know what? Today, the cautious swimmer is smiling all the way to the bank. The stock is up almost 3 times since December 22, and its profits have also grown. So that brings us back to our main topic, Suzlon Energy. Now, is Suzlon meant for a bold surfer or a cautious swimmer? While looking at it, Suzlon definitely has the makings of a bold surfer stock. Its real value lies more in the future than in the past. To be honest, if you look at its history, apart from the last couple of years, it has been pretty bumpy. Because of its financial history, a cautious swimmer would probably not want to invest in Suzlon right now. He would want to wait a few more years, see the company show steady growth and stability, and then maybe consider it. He is looking for that calm, safe water. A bold surfer, on the other hand, will try to guess the company's future prospects. If he believes that there's still a lot of room for the stock to grow, he'll buy it. He is looking for that big wave to ride, even if it's still forming. Now let's talk about something important, fair value or intrinsic value. For a cautious swimmer, the fair value of a company depends on how much money it is earning now, multiplied by a reasonable price to earnings or the PE ratio. It's about what's proven and safe. But for a bold surfer, fair value is all about the future earnings. He tries to imagine how much the company will earn in the future and what kind of P ratio the market might give it then. It's a forward-looking view. Now let's do a quick calculation for a cautious swimmer's view of Suzlon. The most Suzlon has earned per share recently is about rupees 2 rupees and 30 paise. So if we use a decent P ratio of say 20 times, then the fair value for a cautious swimmer would be around rupees 46 per share. Let me repeat that, 46 per share. Looking at today's price, the risk versus reward for a cautious swimmer simply is not looking good. There's not much safety or upside from this point for someone who prefers a safe approach. Now the tricky part for a bold surfer trying to find the fair value is that he can choose almost any future EPS and any PE ratio he wants, which can then justify almost any fair value. He could say, or he could even say, Suzlon is worth 150 rupees a share based on future earnings of rupees 5 and a PE ratio of 30. But a bold surfer still needs to be realistic. He has to guess a proper future EPS and a PE ratio that the market would actually accept. It's not just about dreaming big, it's about smart guessing. Now for me, I lean more towards being a cautious swimmer. So I don't have to face the difficult task of trying to figure out Suzlon's future fair value. For me, based on today's numbers, the risk versus reward does not seem to favor the investor who, like me, prefers safety over a big adventure. So where do you stand? Are you a bold surfer who's ready to ride the big waves of future trends, or are you a cautious swimmer who prioritizes safety and steady returns? If you are a bold surfer, you certainly have the chance to make much more money if you are right. But remember, the downside is also huge if you get it wrong. So please tread carefully. That's all from me today. I hope this gave you some valuable insights into thinking about stocks like Suzlon. I'll see you again in the next session. Goodbye and happy investing.